Welcome along to number 3 balance day adjustments for NCEA level 2 accounting. We're actually going to redo and do another accrued expense adjustment. We're working from trial balance for Ron's Recyclers at the 31st of March 2017, and here was our unadjusted so far. We'll go on to the adjusted one as we've been working through it a bit later on. However, this adjustment requires us to make a look at our wages expense, because we've just been told that we are still, as at balance day, owing $150 worth of wages that's still owing at balance day. So when we look at our wages figure in here, we know that that's incorrect. In fact, that should be added on by another $150 to give the correct figure for to be used in our income account for this year ended for this business. So let's go and have a look. Wages of $150 are outstanding. The wages expense should be at $35,150. It's currently only recorded at $35,000. So this has to be adjusted by adding, and the adjustment figure is $150 to get it to be correct figure for use in the accounts. This $150 is the adjustment required, and when adding an amount to both sides, we know the rules. If we add $150 on this side of the trial balance to one of the accounts, we have to add $150 onto the other side of the trial balance somewhere in one of those accounts. It may be one that we have to open so that we can actually keep the trial balance and all our accounts still balancing. So the adjustment is $150, adding on to both sides is the rule. Let's go and have a look at how that looks like on the trial balance. See in blue we have our ones from the previous videos. So here's the new one. 150 onto that 35 to give me 35,150. Add 150 there, have to add it on here. And again as an expense that I'll add it to, so we call that an accrued expense. We've already got $200 in there from a previous adjustment, and now I'm adding another 150 more, being a liability, a current liability, showing our users of our accounts that as at this date we owed $150, so we had a liability for $150 worth of wages that had to be paid over. So let's go and see how you get asked to do this in your accounts, in your accounting exam. So remember, a journal is what changes you have made to the accounts listed to put through the adjustment amount. You're basically rewriting how we've adjusted that trial balance, but neatly. And so in this case here, what we've said here is our $35,000 figure we added $150 to, and on this side we had an accrued expense account that we've already opened up, and we've added in another $150 to it on this side. So just drop that down there. We've got $150 on the debit side to the wages account, and $150 on the on the accrued expense side, and that's the accounts we've altered and by how much. Okay, if you were sitting in an exam to do this, let's go and have a look at how that would reflect on there. There's my wages. I'd add my 150 onto there, and I'd add another 150 onto my accrued expense account there. I would go to my template that they would give me, and I would draw up, that's my trial balance T like that. Draw the same amount, because this is how I'm going to drop the figures down. So 150 onto this side, 150. 150, because remember they've got to match on this side, 150. Whereabouts did I add it to on this side? I added it to an account called wages. Whereabouts did I add the 150 onto this side? It was an account called an accrued expense, because it was an expense that I added to. And what date did I do it? Well, the balance day, 31st of the 3rd, 17. So that would be my journal representing the 150 I changed. Okay, and it matches with what I've done to that T there. So that's the journal, that's the instructions on how I changed it. Now let's go and have a look at the general ledger account, and remember This is a story of what's gone on in the box. So let's have a look here. Goodness me, it's got a bit messed up here, but I think we're getting there. So if I were to look under my wages, it says, please tell me the story of what's gone on under that wages heading. So there's the heading. They told me that I started off with 35,000. So the balance was 35,000 and it's debits because it's sitting there on that debit side. They then said to me, I then added on 150 more to get it right. 150 more debits. So more debits gets added onto that, and I'm reading my story across like that. So 150 debits is now sitting in that account. Before I go any further though, it says to you, okay, you've added this 150 to the wages account. Can you tell us where you, what account did you put against that? Where did the other 150 go to? Because remember, we have to have a double entry in accounting. Well, I said, if you want to go to the opposing credits of that 150, go to the accrued expenses account up over there. Okay? And then remember, wages is an expense, so at the end of the year I have to get that down to 0. So that's my nil account. There, I've lost the mouse there. Okay, I've got to get that down to nil. I've got 3150 debit sitting there. How do I cancel that out? I put 35150 credits in that account, brings that down to 0. So effectively, where do the opposing debits, where does that debit end up? In the income summary account. Now, we didn't do this previously, but the accrued expense account, remember, is $200 of interest on the on my loan and 150 wages I'm outstanding that I still owe at the end of the year. So basically, that's got an impact for next year. So I have to pay that interest and I have to pay those wages next year. So those don't get shut down. They have to stay there in the balance sheet. So if I were asked to do the story of what's gone on under accrued expense account, there it would be. I had no outstanding balance there. Everything that's in that account is what I've put in there. I put in a $200 and I put in $150, and that now is my outstanding, what I have to owe, what I have to pay as my liability, current liability, $350 at the end of the year, which has to get sorted out next year. So that's that adjustment going through.